This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Right, hello and welcome to Camel Finance. I'm your boy Camel, and what a week it's been. It's finally Friday. I'm not going to lie, I'm looking forward to spending some time with my family and relaxing. For anyone that missed it, there's a discount on this cycle PDF thing that I wrote. If you want to know everything about cycles, everything that I know about cycles, I put it all in one PDF, and you can download it for about another 24 hours at a discount if you use code Camel Crew 2. The feedback on this has been absolutely phenomenal. Everyone seems to absolutely love it. So thank you for all the support. Use that discount code if you do want to get hold of it. It'll be available for about another 24 hours. A lot of people tagged me in this morning. Forbes has put out an article that says Blackrock reveals it's quietly preparing for a 35 trillion Federal Reserve dollar crisis with Bitcoin predicted to spark a sudden price boom. So, I mean, is it quietly preparing if it's on the front cover of on the front cover of Forbes? Not in my humble opinion. And a lot of people were saying, is this going to drive the fear-driven fifth wave? It may well do, okay? But I don't really think we should put too much attention on the media. If anything, they're perhaps ringing the bell to try to put this thing above 100k and then get a bunch of people to FOMO in at the top. Maybe that's the plan here. But as this guy David points out, okay, Forbes can't really be trusted. You can see, posted on the same day, right? Bitcoin has no intrinsic value and Bitcoin is here to stay. I mean, this is why I don't pay attention to the media, but I mean, it's certainly an interesting headline, right? Do you remember this chart here from CryptoCon? Because as you can see on the left, we went Feb to March, April to June, July to August, August to September, okay? And then in October, we skyrocketed. And CryptoCon was pointing out that we're doing the exact same thing, just a month early this time around. So this is 2024 on the right hand side, and you see we went Jan to Jan instead of Feb to March. We went March to May instead of April to June, June to July, July to August, September, right? And now we should be ready for the unthinkable. Most people thought September is a seasonally weak month for Bitcoin historically, but this time around, we seem to be ahead of schedule, right? And that kind of makes sense if you think about it, because we made that all-time high before the halving. That proved we were ahead of schedule. The run from the lows to that top prior to the halving was about 250%. I think it was over 250%. So digesting that move for 6 months makes a lot of sense. But again, we are still probably ahead of schedule. At least that's what the all-time high before the halving showed us. And that's what this structure here suggests to us. Now, the only missing component, of course, is this bit. And we've already done about a quarter of that. So as you can see, we've already moved from here to here. Okay, here we are today. We still really need to get above this high before I can start to say, okay, we've got a chance at actually seeing this. But so far, the signs under the hood are encouraging, okay? It certainly looks like we have got a chance of having a bullish September, which is not typical for Bitcoin based on its seasonality. But remember, seasonal tendencies are just that. They are tendencies. They do not have to repeat every year, and oftentimes they do not. We've got further evidence to suggest the month of September might be bullish for Bitcoin because institutions are no longer aggressively shorting Bitcoin. The CME futures net positions have declined by 75% over the past 5 months. And lest we forget, Bitcoin for now at least is right on schedule relative to its prior 2 bull runs. Again, when we made that high pre-halving, we were very much ahead of schedule. The gap between here and here is quite large. But since then, we have had this quite orderly walk down, this mean reversion, and now we are sat right back where we need to be. The next 60-day cycle low just so happens to coincide with the US election day. And of course, the big question for me here is, are we about to make either a double top or a lower high, right? Or even just a quick deviation above it, something like that, and then come down here to the next cycle low? Or are we about to see a change in market structure, a change in behavior? Are we about to do something akin to this? Breakout, retest, resumption, new higher high and higher low confirmed. And that would tell me to keep an open mind about seeing the next 60-day cycle low form significantly higher than the prior ones that we have seen. I still think we are in complex mode in terms of figuring out what's going to happen over the next couple of months. I'm seeing an awful lot of people draw parallels here, including myself actually, to 2007. The last couple of times, the first Fed cut was 50 basis points, okay, was 2001, and the S&P 500 fell 39% in the next 444 days. Unemployment rose another 2% from the current levels, and we saw a recession. In 2007, the S&P fell around 54% in 372 days. Unemployment rose another 5.3%, and indeed we saw a recession. So I see a lot of people pointing at this, and I've been one of these people as well, asking the question, right? Is it possible that we're going to see something like that repeat? Are we going to see unemployment continue to increase? Are we going to enter a recession sometime in the not too distant future? And most importantly, are the risk assets, the stock market et al., all going to sell off? Under the hood, okay, the setup to 2007 is not really that similar to today. But as Sven points out here, okay, we had 50 basis point rate cut at September 18th meeting, both in 2007 and this year. But keep in mind, in 2007, markets raced to new all-time highs following the initial rate cut. Soft landing talk permeated the landscape. The recession began in December 2007, but was not officially recognized or declared until way into 2008. It was actually a full year later, as I've shown multiple times on the channel, with the Fed still claiming no recession in February 2008. And you can see that here, February 2008, Bernanke sees no recession but a big challenge. So for the claims that it's different this time, you are correct, okay? In 2007, debt to GDP was 64%, the deficit was 1% of GDP, and market cap to GDP was 107%. Nowadays, debt to GDP is 122%, about double what it was in 2007. The deficit is 8%, 8 times higher, and the market cap to GDP ratio is 200%, again, almost double. So it really is different this time round. It's actually much, much worse. And I think a lot of people were very quick to point to 2007 and say, well, Camel, that was subprime mortgages. We don't really have the same deal this time around. No, we don't have a subprime mortgage crisis that we're looking at the moment. But under the hood, okay, we are not necessarily setting up for a roaring 20s and a huge bull market here. Things can change and they can change quickly. And until they change, then we stay long and strong, okay? Make no mistake about that. But under the hood, this time is a lot worse, and it speaks to the decline in the recession when it eventually shows up, being a lot worse than 2007. And as Sven agrees here, right? Now, whether or not this turns into a recession remains an open question, but we should stay open-minded. Whilst I see a recession, whilst I expect a recession, and that's been in my base case since the lows, that we would have a blow off top, all-time highs, and then enter a recession, I am by no means one of these people that is 100% convicted, trying to sit here and tell you we absolutely will have. All I do is check in on the data once a week, at those weekends deep dive, and check for invalidations. So far, things look like we are very much heading towards a recession. The fact is, a historically very expensive market with a forward PE of 21 and expected earnings growth of 15% is what we are currently operating within, which means there is very little room for error. If we start to see companies miss this earnings growth of 15%, which is quite a high target, it's not going to take long for a massive unwind to occur. The Fed is still behind the curve, the most in 3 decades, in fact. Even after that 50 basis points cut, the difference between the Fed interest rate and the 2-year Treasury yields is the highest in over 3 decades. In other words, expect more rate cuts and faster than the Fed projects. Something just doesn't add up here, okay? Especially if you know where to look. The Fed expects unemployment to hit 4.4%, up from 4.2%, at the end of this economic cycle. So you can see that here. Their Fed projection is that it will peak next year at 4.4%. Yet, at the same time, they see rates going to 2.9% from this 5.5% peak. So you can see that here. They expect to have a federal funds rate around 2.9% by 2026. So whilst they stand there at FOMC and they say they do not project a recession, and they say that they are confident unemployment is not going to continue to rise, at the same time they're projecting they're going to cut rates as if there is a recession right around the corner. So again, I make the argument that we should not listen to what they say, but instead look at what they do. And I also think, given how far behind the curve they are, okay, given the gap that we've got between the Fed funds rate and the bond market yields, okay, the Treasury yields, the 2-year yields, and it's almost certain, in my eyes at least, that they are going to end up cutting way more aggressively than they project here. Remember, the yields are going to continue to come off, which means the Fed is going to continue to be forced to do more and more aggressive cuts. So as you can see, we are certainly in complex mode right now. There's nothing easy about what comes next. I think the canary in the coal mine will be this dollar breaking out. Until such time as that happens, then we can continue to see dollar softening. Start to break out here, and I'm going to be thinking the end is pretty close. The stock market appears to be set in this third and final blow off top angle. So happy days there. We do know we've got a cycle low due sometime around the end of this month, if not early October. So we'll have to be on guard for that. That is an opportunity to add one final time before I start to find the top, call the top officially, and then look to be net short upon this third and final angle breakdown. Notice how the Nasdaq, okay, completed a recovery of the second angle, also made a repair above the blue. Happy days there. The Dow Jones closing at fresh all-time highs above 52,000 as of yesterday. The Russell 2K seems to want higher as well, so happy days there. And notice how going into a VIX crush Friday, we are looking to see if we can actually get down towards these lower numbers for the VIX. A nice couple of big red candles, and I think I'll be ready to add my VIX exposure. Gold is giving us a very nice, strong, powerful uptrend for this cycle so far. I think we've left behind a half cycle low, so we should be looking for a bit more of a push, cycle low, and then from there we'll be looking at getting out of the market on any kind of bounce, I think. Silver completed breakout retest resumption. looks like it possibly wants to now target this high from back here. And then I think we could see perhaps a quick rip into much higher numbers. And of course, Bitcoin, okay? Bitcoin officially looking to close the week on a weekly candle with a breakout, okay? If we do something like this, look at that, okay? That's not nothing. That is significant. As I keep saying over and over again, we really do need to see this high taken out. We need to see a change in market structure. If we can get that, then I'm thinking we've got the best chance we've had in a very long time at seeing a true breakout and 100k plus target for Bitcoin. If you're a level 3 member, look out for the video I'll be putting out for you guys tomorrow after the deep dive on the main channel. For everyone else, look out for the deep dive on the main channel. We'll be continuing to check in on the base case hypothesis and see if any invalidations have occurred. Other than that, I hope you're doing well in life. Have a fantastic weekend. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his mind.